Fintech Chatter podcast, brought to you by Tier 1 People, the leaders in executive search for fintech ventures.
Citoplus is a unique digital platform for brokers who are writing SME lending. And the problem we're trying to solve is everyone in banking in Australia over the last 15 or 20 years has spent every last dollar of investment and digitisation energy into home lending and originating home loans either via a broker or directly with a customer. And SME lending's the sort of poor cousin, if you like, in that it's more complicated, it's more archaic in terms of how it's done, or more old school, if that's the right word for it. And it's more complicated to digitise because of the sheer nature of it. And so what we're trying to solve is bringing SME lending into the modern age rather than the very manual sort of paper-based Excel spreadsheets, PDF application forms, and all the problems that creates for everyone involved is sort of how SME lending has always been done, and it's like being back in the 80s. Everyone wants to do a good job. Yeah. It's just a question of priority, investment, capability, and not just tech capability, but also internal capability to do that. And so if you go through a cycle where banks, despite being the size they are, still have finite capacity to change themselves and invest in things. And we are now in a cycle of where all the focus is on business banking, on serving SME customers well, because it is where the growth is, it is where the returns is, it is where the opportunity is now, where home lending is a sort of far more mature market and a slower growing part of the market now than SME lending. And so the cycle has turned both in terms of where the growth and opportunity is for banks, as well as where the investment cycle is now. And so I think we are in a sustained phase of investment by all banks across the market in their business banking capability. And it's not just tech investment, it's people, it's processes, it's the whole lock and dice. Like if you talk to anyone in the banks, they want to serve SME customers well, they want to deliver a great experience. Often they use people to shield business owners from the archaic processes underneath the covers. But as that investment comes to fruition, they will radically transform the experience, and everyone is in the process of doing that. And so it was one of the conversations we had when we started Citoplus going, because that wasn't the case when we first started Citoplus. It was still very much mortgages, mortgage lending. One of the doubts that we had when we started was how quickly would the cycle turn, and would that be the case? Because you can't go through another 30 years of it all being about borrow against your home, that drives consumer spend. You need a healthy and thriving business segment too. And thankfully enough, it came quicker than I thought it would. We're a pure technology company. Right. In that we aim to be the B2B SaaS platform that most people will never hear of and never know anything about. But it's just how business is done between the business customer, their broker, the bank, and it just makes it all work seamlessly in the background without anyone really thinking about it or consciously going, oh, I've got to use Cito for this or that. It's just the sort of technology infrastructure that underpins a seamless experience and a fast and efficient and easy experience for everyone involved. It's a classic ecosystem. It's one of those opportunities where there is typically one platform, whether it's PEXA in the case of digital settlements, or whether it's, there's a company called Next Gen Apply Online that's done what we're trying to do for home lending and been the very successful player in that market for a long period of time. And so it is always, there's usually one platform that everybody uses to do this. And so you actually need to bring everyone on that journey, and it's a classic chicken and egg. The more brokers you have, the more the lenders actually want to work with that platform. The more lenders you've got, the more brokers want to work with the platform you've got. So you've sort of got to bring everyone on the journey and build enough relationships on both sides of that ecosystem for it to reach the tipping points where actually adoption starts to drive on the critical mass of brokers and lenders. The idea for it came about actually sitting inside lenders. So I was working at NAB, working at Judo Bank, pre-IPO, and my job was to help scale, in the case of Judo, help scale Judo Bank and help it truly take on the big guys. And it's a classic, you see the problem on the inside, but realise the problem, or the problem can only be solved on the outside of any one lender, i.e. it's a many-to-many problem. Brokers want to deal with many lenders, not just one. Lenders want to deal with many brokers. And so by definition, that means no one broker or one lender can create the solution that everybody wants to use. And so it was actually sitting in Judo, but a culmination of many years of experience of NAB and time at Judo Bank. Going, well, sort of three contentions. One, that ultimately SME lending will digitise. That's not hard to get your head around. It's just a question of how and what's the catalyst for that. The COVID period actually accelerating digitisation in a way that would have taken 10 years otherwise to happen. And so a real stimulant into the system that would otherwise have not been the case, and digitisation truly accelerating. And then the realisation that no one had actually created the solution. So the business started about 3.5 years ago in terms of the idea and the sort of seeding of the idea. We've had a platform in market for over 2.5 years now. We had 10 brokers that were sort of...
What was the first iteration of that?
The first iteration was actually just build the first version of the platform, to have something that any broker could use. Forgetting about sort of the full end-to-end digitisation of process. Just
and you built it from scratch?
Built it from scratch.
Not like Judo going to Temenos? And...
No, it was completely from scratch. So we had an offshore development team from day dot in India, and a CTO and myself and my co-founder, and that was it. We sat in the office of some friendly brokers that we'd known who were ex-colleagues, and literally built. It was true customer testing and true build from scratch and iterate on the fly. So for 6 months, we just created the FAT platform from the foundations up. And I'd call that the true MVP too. Like, when you're doing a startup, you can't afford to get it to the sort of perfect product. You just got to get to something that you can put in the hands of a customer and then give you real feedback really quickly on, okay, hate that, don't like that, that's not going to work, but can you do this, this and this? And so we started with 10 brokers and a platform from scratch, and that we launched in March 22. And then it's been, for the first year and a half after that, a tech release every week. For the period after that, to go from MVP to something that we thought, actually, this is starting to be a reasonably good product, but not perfect. And then you've actually got to sort of start to crack into, well, we can't, if there's 20,000 brokers in the market and roughly 40 or 50% of them do write SME lending, we can't go door to door to 10,000 brokers and do that sustainably. And you've also got to have the supply side of that ecosystem in place, which is the lenders too. And that's where there's this concept of aggregators in the broker market, and that's, if you like, the homes to groups of brokers. And then you go to any lender that would take the conversation and try to get them to buy into the concept of what you're trying to do and be one of the first to sort of really get behind you. And I'm sure every founder out there doing fintechs knows those first couple of customers, in terms of big enterprise customers, make such a big, there's true sliding door moments. If you land them or don't land them, it makes such a difference to your journey, and you just got to find one or two that are going to back you and be brave, right? Because you're not ready yet. You're not the perfect solution for them yet. So we have raised money 2 times, and actually we'll raise again in the future. We've done that through friends, families and fools. I would describe it early. Anyone who's doing early stage seed funding is very brave, and they're really backing the people first and foremost, because you don't have product market fit, you don't have a proven solution. What you have is an idea, an opportunity, and a team of people that they're backing. And so we're incredibly lucky to have very supportive shareholders from the beginning that knew what this journey looked like, had experience of this. Most of the people involved in my company have a very good understanding of the banking market. I don't need to explain to them that exactly the story you shared, what SME lending looks like today, and for them to actually see that that is a big problem to solve and a big opportunity. And then it's about, can you execute, Graham? And we've been pretty disciplined. The first couple of years, we didn't fund the business for 2-3 years of runway. We said, we're going to take this amount of money, we're going to hit these milestones, and then if we do that, everyone's in for more. Yeah. And so you've got to live or die by both the commitments you've made in terms of the progress you're going to make, as well as the build out of that at a pace that, and obviously if you go through the procurement process of a big four bank, you can't be funded for 3 months of runway. Right? They're not even going to sign the contract, right? And so you do have to think consciously about what earns the right to play, what gives you the credibility of execution to demonstrate a track record that people will then fund for the long term, but also when you actually need to be set up for, someone, if you're asking a bank to sign a 3 or 5 year contract, they're not going to sign it with an organisation that has 2 months of runway and then needs money, right? Banks sort of desire to build things themselves versus partner, as well as then how do they drive advantage from that? And I think there's 2 components to that question. The TAM is, there's actually 1.2 trillion in SME lending in Australia, of which 30 to 40% is via brokers today, depending on which sort of publication or statistic you believe. It's not as well covered as mortgage lending, so it is a little bit more opaque in terms of that exact percentage. But it's on its way to 50. And I was involved in helping NAB into that market in 2012, and back then it was 5%. So it's gone from 5% to 30 to 40% and rapidly on its way to 50%. And SME lending is actually shorter tenure than home lending. Most home lending, the average life is 4 or 5 years. The typical SME lending is actually a 3-year loan in terms of behavioural life. So you're talking about $400 billion in new SME lending a year, of which, let's call it shortly, half will be via brokers. So there's 200 billion in lending per annum that we're trying to help. In terms of your question about the dynamics of working with players like Westpac or the banks that we're partners to, the unique component about what we're doing is digitising an application, i.e. the transfer of information between you as the customer, your broker, and the lender that they end up submitting the loan to, doesn't drive a source of competitive advantage. What is the source of competitive advantage is what the lender does when they receive that application, i.e. their capacity to deliver a great experience from the moment they receive the application until they give you the money. Now, the beauty of digitisation is you're getting consistent, standardised, aligned to their systems and processes information. And so they can invest in everything downstream from receipt of an application to drive advantage versus others, which is all about their internal capability. And they don't have to invest in the bit that actually makes no difference to whether they have that advantage or not, which is just the digitisation of the inputs into that.
Got you.
And so when we have, because the first conversation we have with every bank is, we can build Citoplus. And I go, yes, you can. But it sort of goes back to the dynamics of many-to-many problem, not many-to-one. And why invest in something that drives no competitive advantage for you? Spend all your money on the things that do drive advantage. Let us take care of the ticket to play. And that, as a business case for a bank that has many competing priorities and lots of things to do, is actually quite an interesting use case for them to contemplate.
Yeah.
Lots more announcement of banks and non-banks that we're going to be working with. And with a bit of luck, lots more partnerships in the broker community too that take us from, at the moment we're working with aggregators and lenders that should see us get to half of all brokers in the market able to use Cito, and more than 75% of all the lending they do being digital.
Wow.
And we want to take that to as close to 100% as possible.
Wow.
And so you'll see announcements along the lines that bring that to reality.